Hi, morning. Great to have you on the show. Chakri, just wondering what's bogging markets down, and do you think it's, like we were just discussing, the labor code adjustment and how it's going to impact profitability across sectors? Do you think the market is just being quick to adjust to that?
Good morning. Thanks for having me. Good to see you all. I think the market is kind of waiting for that one word called tariff. Until there is a kind of a resolution, we're going to be range bound, I think, because that creates a lot of uncertainty. And of course, now we're going into the budget in February, and there needs to be a capital expenditure focus this year around because it was missing the last 2 years. I guess until these two events happen, we're kind of going to be stuck between a range.
Okay, Chakri, with regard to some of the insurance plays, we had a Lombard, we had an ICICI Pru, of course the ICICI subsidiaries which have come out with numbers. How do you assess the numbers and any concerns within that pack, especially ICICI Pru not seeing enough growth and Lombard, while they're seeing growth, the combined was elevated. So trying to get a sense of how you view the numbers.
I think one thing which is impacting the whole industry is the labor code. And that's like a one-off event in the sense that, as it readjusts, the market will look past beyond that because this is a permanent feature for the market, and that will clearly and the market will discount that negative impact of that. Second, this is an industry which continues to be very competitive. If you look at any of these companies, if you look at their motor claims have risen, so there is a greater amount of provisioning that is required, if you want to use that word. And therefore, the margins will kind of remain in that, you wouldn't see an expansion. So with that as a backdrop, I think we have to bank on a recovering economy leading to higher volumes.
Chakri, how do you look at some of the IT companies? You have TCS and SL Techs, which has come out with earnings. International revenue seems to be on a slower footing for them. Today you have Infosys and and on Friday you have the Wipro numbers coming in. How are you penciling in earnings for some of the IT companies?
IT had a bad calendar year 2025 going into 2026. Some of the AI infrastructure spend, that spend has now translated into the various AI infrastructure being linked, and that's where the Indian IT services company will benefit as we go into the coming quarters. This quarter is anyway a soft quarter, which is largely expected. But the good news is we're beginning to see some amount of margin stability. And in terms of the total order values, they are kind of in line to marginally better than expected. So I would think actually IT will benefit in this environment. Given last year's underperformance, this year we should expect them to do much better.
Okay. Kunal, if I can come to you with regard to some of these insurance names, I know that they don't prop up on charts or aren't favorites, frankly, in a while now. Any of those names on your radar at all? Because you'll have numbers coming through all through the week.
Yeah, I think ICICI Pru and SBI Life are the two ones which are strong. SBI Life has been more consistent across the last many years. ICICI Pru, over the last couple of months, the stock has started to look attractive. It's come back. I think both of these stocks have come back to their individual or respective swing highs, as the case would be. For SBI Life, the good part about the stock is that the stock has managed to break past above a series of hurdles on a multi-month basis, and the stock has been trading above the long-term moving averages for the last, I think, 6-7 months, broadly from mid of 2025 onwards. So that, I believe, is a positive for the stock price on the medium to long-term basis. And for ICICI Pru, I think on the short to medium-term charts, the stock breaking past above the previous swing resistances makes the short-term trades a lot more attractive. The only concerning point for the insurance pack is HDFC Life, a stock which seems to have high potential in terms of the long-term charts, but seems to have disappointed for a long period of time. The stock has been unable to break past the series of resistances around the 750 to 800 barrier and keeps on fading from those higher levels. So we need a decisive breakout of that band for HDFC Life to start to get the stock back into a zone of outperformance.
Okay, and if I can quickly also ask you on Tata Elxsi, because those numbers came out. You've seen a bit of a margin recovery there, which is that play over the last couple of quarters. How's the chart looking on that?
In fact, I've picked up Tata Elxsi as the one of the picks over here.
Yes.
Because of the fact that the stock has confirmed a breakout of its 200-day moving average. The breakout which has happened for Tata Elxsi in the last 1 week has been very strong, and the volumes which the stock had clocked, there was a 300 point or a 250 point up move on a single day for Tata Elxsi. The stock came back just very close towards the 6,000 mark on the back of those extremely strong volumes, and the manner of the volumes have managed to lift off indicators on the weekly as well as on the monthly charts. So that I believe is extremely positive for Tata Elxsi.
The one stock we must talk about and the kind of fall that it had and thereby impacting the Nifty move as well was L&T yesterday. Although there were clarifications that even though there is that 25% tariff announced by the USA on trade partners of Iran, and that's going to have likely or rather minimal impact on India. Last year, remember, India's total trade with Iran was about $1.6 billion, and that is approximately 0.15% of India's total trade. There were, of course, a lot of rumors whether this is going to impact conglomerates like L&T because of their presence in the region, and that was later denied by the company as well. And I think even Reliance Industries made clarifications that they wouldn't get impacted because of US implementing the 25% tariff on Iran. But Chakri, to your mind, Reliance, L&T, and whether or not cracks like yesterday should have been buying opportunities?
Reliance clearly, yes, simply because, they have a lot going for in terms of their new energy businesses. And as the cycle turns, they would really benefit. And, they've been impacted largely by the political news such as Iran in the last few days, and therefore present buying opportunities. L&T, on the other hand, while the amount of business they do is very little with Iran, on the other hand, we need to wait and what the budget entails for capital expenditures, and that will hold the key until then, but I would rather buy Reliance.
Okay, all right. Cross. Chakri, Bharat Coking Coal, is that something that you're finding interesting in terms of the IPOs that are coming through? And if at all, one were to get subscription in this very, very highly competitive IPO, would you continue to hold? Would you exit? At what point? 20%, 30%? Give us a sense.
That's a very simple, powerful business, and India as a country needs lots and lots of coal over the next many years. And this is a business which is a market leader, a company which is a market leader, and it has to have an expansion plan, which it does. And as the value add in terms of margin improves, whether it's washing coal or improving deliveries, and that is a very simple operations-driven business which the company excels at. So it's clearly reflected in the IPO numbers, phenomenal subscriptions, and therefore stock open very high. If the stock opens maybe a good, I think it's going to open up very strong depending on the market day. But even at about, for a long-term holder, I continue to hold even after the listing. But for a person who wants to make an exit, maybe about the 40% higher, maybe just a opportunity to take money off the table.
Chakri, do you look at other IPOs like an Amagi, which is coming out today?
No, sorry, I don't follow that.
Shadowfax as well.
Shadowfax is as well. So, while Shadowfax is into third-party logistics and is profitable, Amagi is into content streaming and platform, which is actually a loss-making. But it's an interesting new age platform which looks at a lot of digital content streaming over there. So that's something which is interesting, which is for Amagi. Chakri, how do you look at some of the other stocks, especially private sector stocks? In the last 2 weeks, we've seen some pressure coming on HDFC Bank. You have Kotak, Axis.
In each one of these cases, there were company-specific issues. HDFC had talked about, they have to readjust their loan growth. Kotak has a growth issue, and Axis Bank is now getting over the provisioning issues. But that aside, I think there's a sector, and as banks, their still balance sheets are very strong, and they do very well in a recovering economy. The valuations are still all right. So from a financial services sector, I think will outperform going into this year.
Pretty much the latter half of last year has all been about, the juggling of out of private banks and into PSBs because that's where the valuation was favorable. What next? How do you make that distinction? And do you make that distinction at all between PSBs and private banks?
Good point. In fact, if you look at the valuations are still attractive. And, if there is going to be a capex focus in the budget this year in February, then again, PSU banks will again be in demand because capital expenditures go to PSB banks. And third is, their balance sheets are in great shape. State Bank of India, Canara Bank, across board, their balance sheets are strong. So as Kunal said, I think, this earnings is going to be important. If they meet or beat estimates, then I think they continue to do well.
Right. Okay, that's the take coming in on PSBs. Just counting down then to the market pre-open rates, and also look at what some of the other newsmakers are going to do. There's of course Spark, wherein R&D day call was hosted, and the focus is now narrowed to oncology as well as immunology. The board is also going to be considering fundraising, so that's one stock in focus. Coal India too, given that Bharat Coking Coal, it's a 1,071 crore rupee IPO, and that's drawn about almost 1.1 lakh crore rupees in terms of its bids. It was subscribed about 147 times with 90 lakh applications. So that's been, of course, a fire starter. And then, of course, a couple of order wins for an Interarc, etc. And yeah, the one big trend that you may want to look out for is what happens to IT. Today, you've got Infosys numbers, you've got Tata Elxsi's numbers, which the market is going to be reacting to. So, IT, of course, given that it's in, or rather amidst reporting its numbers, that's going to be one sector in focus. And then, yeah, of course, there's Eternal as well, which has said that there is no change in Blinkit's 10-minute delivery business model, irrespective of the verdict which came out just yesterday. ICICI Lombard as well came out with its numbers, and the Q3 premium has been earned, and that's seen an uptick of about 13%. Chakri, let's pick up on the point of Eternal. The fact that there was the verdict yesterday that 10-minute delivery is going to be eased off and there will be no time-bound pressure on deliveries now from Q-Com players. Amidst that, one has really seen that struggle for Eternal. I think it went all the way back down to 280 thereabouts, and now it's climbing up back to 300. Still a buy, you think, at 300 thereabouts?
The 10-minute removal is actually neutral for the entire sector because it applies to everybody. So each company is not under the pressure to deliver under 10 minutes. Second is the entire industry, whether it's Eternal, Swiggy, all these guys are still facing margin pressures because of the competitiveness of the business. And this is something which is self-inflicted, clearly to gain greater market share. So as a result of that, multiples are likely to come down, and therefore the target prices will come down. And therefore, it'll become a trading stock in the current environment.
Right. Okay, that's that on Eternal. Kotak Mahindra Bank as well, that's going to be trading X stock split now, 1:5 ratio. So look out for what that stock as well. And don't be fooled by the aberration that you may see on the stock prices. And then Just Dial, wherein the Q3 profits have seen a little bit of a dip come by. Other than that, there's Railtail as well. Bihar Education Project Council has cancelled 3 of their projects worth about 609 odd crore rupees. So that's going to be one more stock which may see a little bit of a muted move. But the pre-open rates, early days yet, but at least directionally it seems like it's going to be a little bit of a quiet start, while Railtail, of course, flashed on your screens, and that's seeing a 3% downtick in the pre-open rate itself. I want to check in on what Tata Elxsi is going to be up to, whether there's any rebound in large caps and blue chip names like L&T and Reliance after the clarification that was handed out just yesterday in terms of the business that they do with Iran, and given that US has now slapped the 25% tariff on Iran, and whether these businesses will get impacted or not. So L&T on its way to a rebound, 0.5% higher for that stock after that 3% crack that it saw in trade yesterday. And Reliance is going to be the other one, which will just come off you on your screens next, because that also was quite battered. What about TCS? Any stability there? Would be good to see that, even though the stock started off in the green, but completely gave up its gains. And that was the case with HCL Technologies as well. TCS, 0.5% lower still at 32.50 thereabouts. Chakri, getting a little tricky now to maneuver within IT? Would you say wait it out, see what the earnings, what the commentary, what the trajectory is, and then take long-term bets?
Yeah, IT as a sector, I think, will steadily improve as we go into the second half of this year. And that is clearly because, it's not, you will see that greater corporate spend by corporate America on IT and on the infrastructure spend, and that will translate into services revenue. So given all this, this quarter is likely to be a soft quarter, but we could steadily buy into, and, some of the companies like Emphasis, HCLT are better placed.
Okay, that's the take coming in on IT and how one can actually see those stocks play out. Eternal, of course, jumped up quite a fair bit yesterday, was up about 3%. There was Manappuram, which scaled up higher by another 4.5% yesterday. Angel One, Oil India, these were some of the decent plays, as was the case with ONGC, Hindalco. ICICI Bank managed to hold out and withstand the market volatility, as did SBI. Chakri, increasingly one is getting convinced more and more about metals, but wondering whether the risk reward is still in favor or not. What do you think?
They've had a phenomenal run, but I think they'll continue to do well. If you look at any of whether it's ferrous or non, whether it's Tata Steel or a Hindalco or even a Hindustan Copper. Now, all these companies are seeing a good amount of demand resurgence, and that will and you've seen as the global growth also accelerates, they will also benefit. So I think valuations are still all right, and but given they've already run up so much, but they'll still do well, I think.
Okay.